Hey, welcome to The Market Investor. I'm Daniel Snyder, and this is a new journey for me, and thanks for checking it out. So what I want to do here is I get a lot of questions from friends and family of what stocks do I buy, what do I need to be looking out for, what's going on in the financial markets, and just a lot of people that have been asking me the same questions over and over and over again. So I kind of have this idea that since we're all stuck at home anyways with quarantine of the coronavirus, that I can film these and I can put them up on YouTube. And I can just share all the information with all of you, or just direct you to this video so that you can all learn and replay the videos if you need to, and just learn how to invest, right? Learn how to take your money and make your money work for you and control your money instead of having someone else control your money. So the first thing I want to say is I want to encourage you to open a brokerage account today. If you haven't opened one before, there's no reason not to. There's brokerage accounts like Robinhood. There's Webull. There's TD Ameritrade. There's Charles Schwab, Fidelity, and E-Trade, I think. And even brokerages like Robinhood and Webull, they'll offer you a free share of stock just for signing up. And I'll actually share a link with you, and you can sign up through those links, and they will give you a free share of stock. I know Robinhood does it without you even having to deposit any money. Webull, you might have to deposit money. I can't exactly remember. And then the other platforms, of course, have their own sort of promotions, and some don't even do promotions. I will tell you straight up that I use Robinhood, Webull, and TD Ameritrade. Primarily, I've transitioned over to TD Ameritrade for the Thinkorswim platform, which just offers an incredible amount of data on companies. It'll tell you about their revenues over the quarters, what the company does, what it sells, who the leadership is, all the important factors that you need to know before buying a share of stock. And we'll get deeper into things to look in for the companies, such as pricing power and what the investors like Warren Buffett really teach. But I just want to encourage you right now, there's no reason not to open a brokerage account, and especially because the market is so far down right now because of the coronavirus pandemic. You should open an account now. Take whatever money you don't need right now, money that you, worst case scenario, if you lose 50, 90% of it, you'll still be okay. Take that money and go ahead and start the transfer into your brokerage account, because that money will take a few days to settle through the American Clearinghouse Network. And you want to be in a position where you can act right away as soon as this market starts to rebound. We can't really tell you when or how that'll happen. We all have general ideas, but it's a biological pandemic. It's not a financial crisis. So we're all kind of just riding the wave at this point, keeping an eye on indicators, and just hoping that this rebound will happen sooner rather than later. So besides me talking about the coronavirus, the other thing I want you to think about what's going on in the world right now is the oil price war. As we all know, oil has been one of the biggest commodities of our lifetimes, right? The oil that runs refineries, that provides the gas to our vehicles, powers our cities. I mean, oil is such an important commodity. And right now, with the break of the OPEC deal between Russia and Saudi Arabia, and the oversupply of oil and the lower demand for oil due to the coronavirus, it's affecting a lot of our market. So those are the two things that really is factoring on this squeeze to the downside within the market. But as soon as these things start to figure themselves out, whether it's through politics or whether it's through people waking up to their senses and realizing now is not the time to have an oil price war, you'll start to see the market rebound. And I definitely don't want you to miss out on the opportunity to be able to build wealth through an incredible opportunity that really won't probably happen again. This specific opportunity may not happen again. Sure, we might see another bear market in the future. They always come and go, but this is not the financial crisis, right? The financial crisis was 2007, 2008, 2009. Now this is a biological crisis, right? So they come in different waves and they all have different reasons, but I just want you to think about that. The last thing I want to just give you through this video today is a couple companies to look at, because another thing is people always ask me, what companies are you buying? What companies should I buy? I have X amount of dollars. What can I buy for this? Just to hold on for the long term. I will say the one thing that I like to look at is I like to look at companies that pay dividends. That's another way of sourcing income. There are retired people that live solely off the dividends of companies. And you can either do two things. You can take those dividends and you can do what's called a dividend reinvestment plan. It's called a DRIP. Or you can take the dividends and you'll get a check in the mail. I will say you should study the tax side of things, which we'll get into in another video. But a couple of companies that I just want to give to you right now to look at because of everything that's happening in the world. Number one being Costco, right? Costco has recently opened in China, and people are going there and going crazy and buying all the products because of this pandemic. Second one is Coca-Cola. It might have a little bit more downside to go because they had to close all of their plants in India, but they will have a great bounce back. Third one is Verizon. People are going to be using their cellular phones more than ever, something they're not going to get rid of. The expansion into 5G is huge, could be a great play. Disney is so cheap right now. I will say that it's going to stay lower depending how long the cruise ships and the theme parks stay closed. Of course, movie theaters are closed as well, but Disney streaming, Disney Plus, is a great platform. And I think it's, maybe no time soon, but in a couple of years, it'll really take off. Apple, Microsoft, the big tech companies that we both know, pretty much I think they're the only $1 trillion companies left in America as of right now on the exchange. Both solid companies, great consumer, great technology. I love it. Delta. A lot of airlines are squeezed right now, right? No one is flying, but they will get some fiscal help from the government. Delta is a great play. I really think they're the best one to own out of all those. Micron, AMD, NVIDIA. They're three semiconductors, and they're pretty much what build the chips that all technology runs on. Definitely going to be needing those for the futures, especially as we move into more artificial intelligence. Then you have American Express, or you can even choose MasterCard. MasterCard's was granted the ability to move their business operation into China, which opens a whole new 1 billion people of population. If they can really take market share there, it's going to be huge. And of course, American Express and Delta have a great contract agreement, and they both profit extremely well off of those. I will say, as a little bonus point, before you go buying any shares of stock, I always like to recommend looking into buying an index fund. Whether it's putting $1,000 into it or $10,000, whatever you want to start with. An index fund is a low-cost way to just track the overall market. I would say stay away from mutual funds. If you're thinking about a mutual funds are old ways of thinking. Index funds are the way to go now. Mutual funds are controlled by managers that just take way too much money every time they trade. Index funds are kind of just passive things. They're passive things that just continue to follow the market. As the market goes down, they'll go down a little bit, but when the market goes up, they'll also go up a little bit. So as long as you buy them, you don't sell them, index funds is a good way to start as well. So that's all I really got for this video. I hope you find something new, and I hope you learned something. I hope that you'll kind of tune in for the next ones that I'll bring down the pipeline. And let me know if you have any questions in the comments below. I would appreciate a subscribe, a like. Let me know what you do like, what you don't like, and I'll see you in the next one.